Hello, everyone, and welcome to Financing Philadelphia's Future, our program that discusses public banking and related issues about economic development and the welfare of the city of Philadelphia and public banking movement across the country. Uh, our guest today is Oscar Perry Abello, who is the economic justice correspondent at Next City and is very knowledgeable about public banking. He has recently published a book. It's called The Banks We Need, that is about community banking. And we'll be getting to a discussion with Oscar in just a moment. But before then, Tim, if you can go back to the slide about housekeeping issues. I would like to remind folks uh, that if you have questions, we invite your questions and urge you to put those questions in the chat. We'll have an opportunity after the recorded session is finished at 5 o'clock to continue the discussion without the recording, and uh, and that's an open forum, but uh, for purposes of keeping things organized, we would prefer that you enter your questions in the chat, and our chat monitors, um, Connie Belay and Stan Shapiro, will be presenting those to the audience. Um, we suggest that you put your screen on speaker view, and that if you are interested in being part of the forum for the Philadelphia Public Banking Coalition, and you're not already, to put your contact information in the chat so we can add you to our mailing list. Uh, and now I'm very pleased to introduce Oscar. And Oscar, can you introduce yourself and say something about who you are, what you do, and perhaps give us a synopsis of what you were seeking to accomplish with your book?
Sure. Thank you so much, Peter, and thank you to the Philadelphia Public Banking Coalition for having me on today. Really appreciate it. As you may know, if you've been following my work over the past few years, I've been following your work, writing about the public banking bills and implementation or non-implementation in Philadelphia. Over the past, I don't know, I think maybe it's the first time I wrote about the Philadelphia public banking legislation was maybe 2018. So I know it's been a while now, but anyway, yeah. So I'm Oscar Perry Abello. My day job, I'm the senior economic justice correspondent at Next City. Next City is an online publication, a nonprofit, independent nonprofit newsroom that covers solutions to advance social, racial, and environmental justice in cities across the country. And I've been with Next City since 2015. Next City has been around since 2003, and I've been there since 2015, pretty much in this capacity of reporting on economic justice work in cities across the country. And that's included everything from writing about, community banks and credit unions and CDFIs and the bond markets and also public banks as one of the ideas, approaches, or solutions to address and meet the credit needs of communities across the country. And I think I tallied up one time. I think I've written at least 250 stories about CDFIs or community banks or credit unions over the past 10 years. And increasingly, one of the ideas that has been coming up in that reporting has been public banking. Um, and I should and as I've written all those stories about community banks and credit unions and CDFIs, the more and more I write these stories, more and more I report these stories. It all adds up in my head to something bigger than just each individual story alone. You think about 100, 100, 100, 200, 250-ish stories about CDFIs, community banks, and credit unions, how they got started, what impact they're able to have, what policy solutions they're looking for. in order to help support their work. And all of that, lived inside my head as as a bunch of stories and ideas. And the book was really just a great chance for me to put it all in one place outside of my brain and just have a conversation about the banking system with a broader set of readers, audiences, and everyone else who just either forgot or were never told, or had these stories and information and history kind of withheld from them. I'll never forget, back 10 years ago when I first saw the number, that we had, that in 1985, the year I was born, we had 15,700 community banks across the entire country. And today, 40 years later, we have 4,000. And a lot of my work over the years has been kind of delving into why that, not just why that number has fallen, but what has popped up to try to fill in that gap. And a lot of those stories, not all of them, but some of them made it into the book, "The Banks We Deserve," that came out in February.
Well, I've read the book, and I think it's a great piece of research and a compilation of not only the history, but the function that community banks, credit unions, CDFIs play within our uh, financial ecosystem. And of
Hmm.
course, the objective or the purpose of our public bank is to nurture that local financial ecosystem. One of the things that we have noticed is that it's a very competitive environment, and although people are very cordial, they tend to be in competition with each other, and not and concerned that a public bank might have competitive advantages of not having to make a profit, and having government money available to it, and so forth, that that could have an unfair advantage in a competitive environment, which is surprising to us because our entire purpose is to be collaborative with them and to nurture and support their operations and environment. And it seems to me that the minor depository institutions and credit unions and community banks tend to have um, different ways of looking at things, and not necessarily are used to playing together in a collaborative environment. Is that something that you think is an impediment to the kind of nurturing public bank that we have in mind, or do you think that these folks will see the advantages of a public bank for them?
Well, I can't speak for hold on a second, I got the number for you. I can't speak for the 36 community banks that are headquartered in the Philadelphia metropolitan area. That includes the suburbs, by the way. But what I can speak to are the stories I've heard from North Dakota, for instance, and the data that are available that show in North Dakota, 85% of the deposits, the bank deposits in North Dakota, are held at banks headquartered in North Dakota. 85%. That's the highest percentage of any state in the entire country, right? So what you have in North Dakota is a place. It's a place where the banks based in state are still the dominant banks in that state. It doesn't mean there isn't Wells Fargo and U.S. Bank. U.S. Bank their headquarters is right across the border in Twin Cities, and they have branches out there too in Fargo and across the state. Um, you have Wells Fargo, you have U.S. Bank, you have Bank of America. The big banks are there, but they're not dominant. And North Dakotans would like to say, and it's true that they really love their local banks in North Dakota. And it's true, they do. But when I went to the local banks and I asked them about how they do their work and how they're able to compete and be competitive, what is it about North Dakota that makes it easier for them to compete? Not easy, but easier. What gives them an advantage in North Dakota? Without fail, they'll all mention at some point that the state-owned bank in North Dakota partners with them behind the scenes in multiple ways to support the state-owned bank in North Dakota partners with local banks to support their work, to support the work of local lenders, local private institutions across the entire state. Like I said, it does this in a number of ways. And these local banks in North Dakota, they have access to other things like the Federal Reserve and the Federal Home Loan Banks and Fannie Mae and Freddie Mac and the SBA. They have access to all these programs, but what you find is that these programs are less critical in North Dakota because the Bank of North Dakota is there to offer more tailored, more locally responsive supports. One of the things you often hear is, whenever a local bank has a deal that they're not so sure about, or they're not sure if they're big enough to fund it, or they're not sure if it makes sense, or if they just need a little help with the size of the loan, because there's legal lending. There's something called legal lending limits that if it's a small bank, there's only so much it can lend up to. Maybe 500,000, maybe $1 million per borrower. And once you get beyond that scale, you have to go to a bigger bank. Except in North Dakota, you don't have to go to the bigger bank because your local bank can partner with the bank in North Dakota to meet all of your credit needs. That all happens behind the scenes. So a lot of folks in North Dakota who have gotten support from the Bank of North Dakota don't even realize it because it all goes through their local bank or their local credit union. And it's that sort of partnership behind the scenes, public sector to the private sector, that makes it all work. And it is a little bit of a paradox in a sense because you have a public institution, a publicly owned bank in the center, kind of supporting all of the local banks and credit unions across the state, which are all privately owned. So it's a little bit paradoxical, but that's how it was all set up from the beginning. And from the beginning, and of course, I mean 1919 when the Bank of North Dakota was established. That's how it was set up to work.
So, as a practical matter, the partnership model, where the local banks do the loan originations, but they're supported by the public bank, is in effect a way to bring money home to the existing for-profit banking institutions. Is that a fair statement?
Bring money home. I mean, in North Dakota, it's like keeping the money home, right? Because the money come in North Dakota is coming from a variety of industries, agriculture, and also the oil industry. But the money's coming in, and it stays in because eventually some of it gets paid into the state for tax revenue and fees and other revenue sources for the state, and all of that money gets deposited at the Bank of North Dakota. Like in North Dakota, the state government is required by law to deposit all of its funds at the Bank of North Dakota. Now, that is not generally what I see being proposed in other places, whether it's Philadelphia or Massachusetts or Los Angeles, the Bay Area. No one is saying that we should require their local government or their state government to put all their deposits at this new state-owned bank or this new municipally owned bank. It's not about all the deposits. That is something that's unique to North Dakota. But what am I saying here, though? Really, what we should, what I'm, what this is an answer to your question because, yeah, in North Dakota, the dollars just don't go to Wall Street. The tax dollars, the community bank dollars, it just all stays. And in the case of other places like Philadelphia, yes, we are talking about moving some of the deposits currently held at large regional or super regional banks or Wall Street banks moving those deposit accounts to new publicly municipally owned bank. And just like any other bank, you have deposits on one side of your balance sheet and you have loans on the other side. And there's lots to talk about on how to do the loan side of the balance sheet in a way that is commercially viable without the interference from politicians on the lending side.
To clarify, Connie Belay had a question as to whether the the credit unions uh, have the same kind of relationship as the community banks or a different relationship with the Bank of North Dakota. Are they essentially on the same level in terms of the partnering?
Pretty much. I mean, credit unions in North Dakota may or may not do as much or as much of the commercial stuff lending as the banks in North Dakota, but as a group. But you have some credit unions that are more active in commercial and small business than others. That's just a historical fact about credit unions. But there's no they're not treated differently. Credit unions in North Dakota have the same access to all of the Bank of North Dakota's partnership systems as the commercial banks in North Dakota.
And that would apply
Everyone, yeah.
that would apply to CDFIs as well.
Yeah, that would apply to CDFIs as well. Yeah, it's rarer. This is another thing. It's interesting. North Dakota I mentioned there's less use of the SBA or Fannie Mae or Freddie Mac in North Dakota. There's also very few CDFIs in North Dakota. Why? Because the things that local financial institutions get from the CDFI fund in other places, um, local financial institutions get that from the Bank of North Dakota in North Dakota. So you don't have as many institutions that actually even get signed up to to be certified as CDFI. But they don't need the CDFI fund as much
Oscar,
as places in other states. Yeah.
I have a question that I would put in the chat, except I'm the chat monitor, so I'll ask you directly. Um,
Okay.
we often hear in Philly that much of the money that the government holds is very short-term money, which has to turn over very quickly. Money that's appropriated in annual budget, normally all of it gets expended within 1 year. And then other piles of money are in reserve funds that back up bond indentures so that the investors are secure that they will get paid off. Um, how how does the Bank of North Dakota deal with those two issues? The fact that short-term funds really can't be reinvested all that easily, I don't think, into the local economy, and the restriction on other funds.
hmm Um, yeah, I know you hear this a lot, and yes, it's true. Public dollars come in and out, but but that remember, don't forget both sides of that statement. The public dollars come in and out. They come in again and they go out back out again. There's a certain level of average deposits throughout a year that a bank can base its business model on. You know, and that's sort of what the Bank of North Dakota does is sort of they generally have a sense of how much in deposits will be sitting on their balance sheet at any point in the year, and if they have a short-term liquidity need, the Bank of North Dakota itself can borrow from the Federal Reserve. The Bank of North itself can borrow from the Bank of North Dakota itself can borrow from the Federal Home Loan Bank System. It's a member of the Federal Home Loan Bank of Des Moines, and it's a member of the Minneapolis Fed. And the Bank of North Dakota itself can borrow from other financial institutions if it needs to, other larger banks, and it can sort of be it has ways to deal with its own liquidity issues, but for the most part, it can also depend on when the deposits go out. They're going to come back in again the next quarter or the next year or within 6 months. Um, that's what banks have been doing especially in this country, for the long for all this time. It's sort of figuring out like how much in deposits are going to be sitting on our balance sheet over the course of the next quarter or the next 6 months or the next year, and funding a lending operation based on that. And we have created tools like the Federal Reserve or the Federal Home Loan Bank to support all of that. And so that's how the Federal Home Loan Bank, I mean, sorry, that's how the Bank of North Dakota deals with its liquidity issues coming in from the state government. But, you know, we can't forget that deposits come in and out. They come in and they come out and they come back in. So there's a certain level of deposits you can depend on in terms of your balance sheet, and that's what all
Um,
banks plan around.
we
And
have two related questions that possibly
mhm.
relate to that. One is that initially the size of the Philadelphia bank might be like the size of one of the community banks in North Dakota. And that might change the relationship dynamics. That's one question. And a related question, I think it's related, is from Angela Merkert. She said that the New Mexico legislators are too skittish about requiring all deposits to go into a public bank initially. I guess they're still talking about how to form one. And I think it'll take 15 to 20 years to get all deposits into a state public bank. So I think both of these questions are questions of size of capitalization, or, you're saying that it's not necessarily capitalization, but it's cash flow. It's really the issue. So any comment on that? Should those be impediments? Should those be impediments in a startup of a new public bank?
Well, yeah, I mean, no one's going to start immediately at the level of where the Bank of North Dakota is. So, this is a $10 billion institution. So you're going to have to start somewhere. And they did too. I mean, they started out in 1919 with $2 million, which I believe, if my memory serves me correctly, that $2 million in 1919 is roughly $45 million in 2025. It's 45, maybe it's $50 million at this point. So 45 to $50 million in startup capital. And it did take a few decades for the bank to become consistently profitable. And there's a lot of learning from that experience that other banks can take. So it doesn't necessarily have to take a few decades. You can try to follow the model, but yes, you will have to figure out, how big will this have to be of service to the local banks in the Philadelphia region, or within the city of Philadelphia, if you want to limit it to the city of Philadelphia. How big will it need to be? And you'll have to back up into some idea of, okay, so how big will it need to be? It will need to be big enough to be an effective loan participation provider, an effective partner to the community banks and credit unions across the city or the metro area, depending on whatever catchment area you want to use for this thing. And then you'll have to back up into, okay, it'll be this big by year 5 or year 10. How much will we need to start out? And that number, yes, that number, I can't tell you what it is off the top of my head. I don't know, but it's going to be a number that will probably raise some eyebrows. But I know it's up to you. Do you want to be a place that has a more responsive financial system, a more locally owned, locally rooted, locally controlled financial system? If you want to do that, every community bank or credit union that has been in contact with the Bank of North Dakota will tell you that this helps them do that in North Dakota. And I've talked to community banks and credit unions across the country that say the same thing. Once they understand what the idea is, once they understand what this thing is,
Somebody's got to send it out.
and how it can help them, and how, depending on how it's, if it's structured correctly. Once those folks understand what it is, They can see the value of it. Um,
And our threshold issue is usually getting approval of a bank charter from, in the case of Philadelphia, the Pennsylvania uh, uh, Department of Banking and Securities, and we've been told and by regulators in Pennsylvania and California and elsewhere that around 20 or 40 million dollars is sort of the threshold to be have an acceptable business plan in terms of capitalization. In Philadelphia, we've been talking about a higher capitalization than that. Generally speaking, we've been talking about 100 million, which certainly seems to be adequate, not only to obtain a bank charter, but also to make an impact on the local economic financial ecosystem. We, as always, because this half hour goes by really, really fast, but we've only got 5 minutes left. Um, and Oscar, I note that today you published an article about the Trump administration curtailing in various ways SBA programs, specifically the Community Advantage Loan Program. Uh, can you speak really briefly about what might be an opportunity with a public bank to replace the kinds of desirable activity that the SBA has been supporting that they may no longer be supporting?
sure. Yeah, so the SBA program, how can I'm gonna gotta do this in less than 5 minutes, right? So Trump administration last week announced plans to curtail a program that supports a network of private lenders to make small business loans across the country. The average size of a loan in this program is around $176,000. And there were $196 million in these loans that went through this program in 2024. And there were 141 of these lenders across the country that made $196 million in those loans in 2024. Um, and the way this program works is the government says, okay, you're going to make a loan for $176,000. And in case the business folds, if it fails, the government, or not the government actually, the SBA program offers to repay up to 85% of the original loan amount in case the business fails and can't repay the loan. Okay. So what does that do? It reduces the risk for private lenders so that they can make loans that they might not otherwise be able to make because of cash flow issues, maybe collateral issues, the business owner. A lot of the community advantage loans I've written about or talked with folks about are like, they're loans to, a barbershop owner who doesn't own their own home yet. They're renting just like, because they're in New York City and everybody rents in New York City. Um, or they're a barber with 15 years of experience in the industry, and they're tired of their boss, or their boss, the barbershop where they worked, the owner retired, and they want to close down. So this barber who's been working for 15 years says, oh, I can still be a barber. I want to open up my own barbershop. But you don't have cash flow because you haven't been operating your own business. You've been working for somebody else, but you have 15 years of experience as a bartender. Sorry, a barbershop as a barber. So, I mean, or a bartender. You could be a bartender with 15 years of experience bartending, but the bar owner wants to shut down. How are you going to open up your own bar? Open up your own bar. These are the situations where SBA loans tend to come into play, and the government, but it
So,
for a
Oscar,
bank or a credit union, it's too
these are
risky, so you can't
Oscar,
make the loan.
Oscar,
Instead, but yeah,
we're going to turn off the recording in about a minute, and
sure.
uh, I've, I wanted to let you have the last word overall before we do that, and then we can dive back into the weeds in terms of how this affects real people in the real world. So
Mhm.
if in the next minute or so you wanted to just have a last word on the recorded session, and then we will ask any media that may be present to leave, and we'll continue the discussion in a free-flowing manner right after that.
Sure. Well, yeah. So the book, I wrote the book to demonstrate as an argument, using the stories of different community banks and credit unions across the country to show how and why a locally owned, locally controlled financial system is better for communities, for the planet, for people. And that's not just a matter of like, everybody just deciding to move their deposits into a community bank. That's not enough. We also have to find policy ideas, policy tweaks that will tilt the entire landscape back in favor of local financial institutions. And public banking is one of those things, one of those ideas that I've found that does that. It does it in one place. It's North Dakota. It's a strange place to do it, but it's there. And other banks and credit unions I talk to, and they're in the book, and I talked to them about it in the book. They see it as a way to get that kind of support for them at a systemic level. So it's not just about each of us moving our deposits into community banks. It's about the whole system overall, and that's where public banking comes into play as part of the book.
Oscar, thank you so much. We feel the same way, and we hope that we can convince uh, our mayor and our elected representatives on city council to support this as well.